we had a strange week, kind of. We start with earnings and then Powell's speech about the interest rates. So we were thinking that could be kind of positive way for the market. But today, I haven't checked recently, but I see some reds on my watch list. So can you give us why what is happening?
Yeah, the first part of your statement is very important. Don't think. Thinking gets you in trouble, right? All I want to do is react to what's going on. I don't want to think, try to predict what's going on, because that just gets us in trouble, right? What's up, Sean? Welcome, welcome, welcome. So yeah, yesterday, the day of the Fed, when they make their announcements, and he didn't say anything new, Powell, yesterday, nothing unexpected. It was, we're going to probably, and he wouldn't even commit to this, but it's probably a 90% chance that they're going to cut rates in September. Usually the day of the Fed announcement and then his press conference, it's very, very volatile. We are up, we were down, and we saw that yesterday. I mean, it ended up being a very good day to the upside. Today we opened up a little bit. But what I always tell people is usually the next day is when you're going to get the true move, when all the news is out, everybody's had time to digest it. It's usually when you're going to get the true movement of what the market's going to be, at least short term anyway. And we started out okay this morning, and we have just absolutely gone straight down since then. So it's also a case, the market had rallied a lot going into this, for the day of, and yesterday we rallied a lot. So it's kind of a, buy the rumors, sell the news. We like to say on Wall Street, everything that he had to say, if people liked it, great. And then today we come in, and once we started breaking down, and we're going to talk about trend trading today, both short-term and long-term, we really haven't had any bounces in the market. We're just starting to get a little bit now. After we read the disclaimer, we'll put the charts up. Starting to get a little bit of a bounce now. So today was a day where you really got the true direction of the market. And that's basically what happened yesterday. All the Fed, I tell everybody usually the day of the Fed meeting, and a lot of people do this, they don't even trade because we have a lot of volatility. Sometimes the technicals won't work because of that volatility. So it's okay to sit on the sideline sometimes. I don't have to be trading all the time, especially when you have that kind of volatility. I would rather not be in any trades than be in losing trades. And when you really can't predict what's going to happen, it's okay. It's okay just to be on the sidelines, and you don't have to be involved in every single trade every single day.
Do you think, is there any impact on geopolitical news coming up last days?
Yeah, I mean, always. There's a lot of stuff going on with Israel, and Russia's still at war. Yeah. And you'll see sometimes when something comes out, I think something came out yesterday where Israel was going to launch a bomb strike or something. And you'll see big moves in the market off that also. Nothing we could ever predict. I mean, that could happen at any time, for good or bad. We could be in a trade sometimes and we're long, and something good comes out, it goes up. Something bad comes out, it goes down. So, you can't predict geopolitical news. You just got to be aware that it can happen at any time and, adjust accordingly. That's all.
Yeah, at this point, technical analysis is kind of our safe zone.
It is, but sometimes
100%, yeah.
Yeah, it is, but sometimes, it'll disregard that because of what's going on in the market. So, it can work both ways. It works for you, it works against you. Just when we know those things are coming out, just be extra careful. That's all. And it's okay not to trade.
So last week, we covered price action. David, if you can give us a quick recap, if someone missed that session last week, that will be.
Yeah, I mean, yeah. We're actually getting, if we can put my chart up.
Yeah, please. Yeah, I removed the disclaimer. I would like to tell again, the purpose of this session is education. There is no financial advice given. We would like to remind that. Disclaimer, yes. Disclaimer.
Yes. We don't tell anyone where to buy and sell stocks.
No.
We don't tell anyone where to buy and sell stocks.
According to email received today, Daily Edge by TradeZero International, this is one of the trading news for now. Rolls-Royce soars 9% after crushing earnings expectations. Yeah.
Let's talk about that for a minute, Victoria. Okay, because we had the earnings in Meta last night, so let's put up Meta for a minute. We can go back and forth talking about stuff. Meta had very good earnings; they blew it out of the water. But if you look at the chart in Meta, it did the same thing that the rest of the market did today. Right? We opened up around $526, and this is why it's so important to be careful when earnings come out, or economic news, or geopolitical news. You got to give these things a little time to settle in, right? So a lot of people who ran in to buy this thing early in the morning, I mean, it went down 26 points after that. So you got to be careful, especially when earnings come out. It did set up for a couple of trades for us, actually a few trades for us. But just because earnings come out in a stock and we think they're good, first of all, I'll explain this to you with earnings. And it's okay if we go back and forth on different subjects, right?
Yeah.
The actual earnings that come out, the numbers don't mean anything, okay? The only thing that matters is what the stock does and price action. We have seen stocks come out with fantastic blowout earnings and they go down. We have seen stocks come out with bad earnings and they go up. So the only thing that matters is what we talked about last week, price action. That's the only thing that matters. Don't get caught up in the numbers. It doesn't mean anything. The only thing that matters is what happens after those numbers come out and price action. That's it. So we'll recap a little bit of last week when we talk about price action, okay? And if we look at Meta right here on my screen, you can see here when it pulled down to my 65 EMA, right here, that acted as a support level. And if we go across to right here, we had a bunch of price action at that exact same price, okay? So this was resistance on the way up. It became support on the way down. And when we pulled all the way down to that 65 EMA, that was about 511, and we went up $15 from there. So this is what we talk about when we talk about price action. This is what we talk about when we talk about finding levels where a stock has hit a few times and has acted as support or resistance, okay? So as far as trend trading to me is the one that is going to be our most profitable trades. Even if it's longer term, okay, it's going to be one of the most profitable trades. So when we're looking for trends on a short-term chart, okay, we are looking for something that is trading below all of our moving averages. So if we look at Meta, right here, it was trading below all of our moving averages. And every time it went up and tested one of our moving averages, it rejected. Tested, it rejected. Tested, it rejected. Until finally it got to the point where it got above those moving averages. And now this trend has changed, okay? So it's important to recognize when something's in a downtrend and how we get in that trade, and then how to get out of it when it turns and goes to the uptrend, right? So technically, I want to be short at the beginning of the day every time it hits my 9 EMA. Okay, so the first time we hit it, it was like $517. We didn't break this trend until we got above this trend line where we got in on the 9 EMA at about $505. So when I'm trading this, okay, and this is a day trade, but I'll show you some longer term stuff if we can find some stuff that sets up. When I'm trading this, if I'm getting in for this technical reason up at 517, I will get out of the trade when it breaks the trend, and that was around $505, okay? And that was, could have been like a nice 10 to 12 point trade, okay? Now that we've gotten above the trend lines, so maybe the trend now has changed and it's going to start a new trend to the upside. So here's our downtrend, boom, 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 boom. Now maybe we're starting a little trend to the upside. So what I would look for now is it pulls back to these support levels. It'll hold those support levels and then start going higher again from there. So that is trends on a long-term, on a short-term chart. I don't know how many people are day trading. If anybody's out there, put in a 1, okay? For day trading, this is going to be our most profitable trade, because when something gets into a trend, we're just going to stay in it until it tells us not to, right? And we can see a bunch of examples of this. Let's look at the SPYs today. Same thing. It's going to be the same exact chart. Look at this beautiful downtrend. I mean, what gets a lot of people in trouble is when stocks start going down like this, they're always looking for a place to buy it, right? And you should be thinking the exact opposite. You should be thinking, as long as it's in this trend, I want to be short the stock because it's in a downtrend. And what people get in trouble is trying to pick spots to buy it, when actually they just have been in this trend to begin with and enjoying the ride as it goes down. And as long as it doesn't go against us technically, you stay in that trade until it breaks the trend, which it kind of did a little bit now, starting to turn up a little bit. We'll see if that starts an uptrend. I love doing this, and mostly what I look for when I'm looking at a longer term chart. So let's see if we can go to a daily chart in the spiders. Let me see. Let me get my daily. Okay. All right. Let's spread this out a little bit. Okay. What I look for longer term in SPY or even stocks, okay, for longer term investing, what I'm looking for is two things. One, when the trend breaks, okay, so if we look here at the spiders, we broke our trend right around $548. Everybody can see we got below both our moving averages. That to me is telling me now that this uptrend has been broken, okay? Here's your technical reason to get in the trade once it broke here, and now we're getting into a little downtrend. So this is an example of a trend uptrend, and if you look back, guys, this is a daily chart. For, I don't know, 3 months, right? For 3 months, we stayed in this uptrend, and if you look, every time we pulled back, we bounced. Every time we pulled back, we bounced. Every time we pulled back, we bounced until here, okay? So the signal here, the trade is, when we break all our trends, we could start the downtrend now, and we want to be short the stock or the index or whatever it is. The next thing we look for is a support level after that trend has been broken, okay? So if we look now in the SPY, we went from all-time highs at 564 to exactly, if you guys can see my gold line, it went down to I'm trying to see exactly what it was, 530, okay?
Is that the 200 EMA?
That's my 65 EMA,
65, okay.
which is also a very strong support level on a daily or weekly chart. So now what it's telling me when we got to this and we held that is there's another trend trade coming, another turn from a huge high to a big correction, holding that 65 EMA, that support level, and the market went down. By the way, this is the biggest correction I think we've had in 2 years, and it was like 4.5%. It was nothing that was earth-shattering or should have got anybody worried about anything as far as longer-term investments were concerned. But, you know, a 4% move in 6 or 7 days is good. We hit that support level, and now we, again, started that little uptrend. So I like to use my trend lines and support levels to look for longer-term trades, even if I'm getting into a longer-term investment. For trend trade, are you holding until the candle that breaks the trend, or does candle closure matter? No, Sean, as soon as it gets above that trend line or below it by a certain amount, and let's go to a shorter term chart. Okay, let's go to the SPYs today.
And as I understand, David, you're not waiting for a confirmation, isn't it?
No, my confirmation is my technical analysis. That is my confirmation. That is telling me when to get in and out of the trend trade or whatever kind of trade that I'm getting in. A lot of times, if you wait for the confirmation rather than having your orders out,
losing trade.
Confirmation is, you miss it.
Yeah, right? It happened to me. That's why I'm asking.
Yeah, 100%. When my technicals tell me where to get into a trade, I'll put an order out there. If it gets there, wonderful. If it doesn't get there, that happens a lot of times too. There are times during the day where something will move, you know, the video will move 10, 15 points, and I'll have a order in to buy it somewhere, and it'll miss by 5 cents or 10 cents. It happens. You know, that's just technicals, right? So once we get over the trend, so let me get back to my spiders, Sean. Okay. Let's say we got in, you know, the spiders up here, whatever it was. Once we get over this trend line by a little bit, that's going to take me out of the trade. And I'm still making all the profit from where I got in, you know, up earlier in the day. But once it gets in, could this be changing now? Maybe, maybe not. But I've, you know, locked in a nice little profit on the trade. I'm okay. I'll look for some other trade to set up right now. So when we get above that little moving average, that's telling me that the trend is going to change, or might change, and it's time to take profits. If we look at the NASDAQ, okay, this is the QQQs. By the way, what goes into the NASDAQ? All right, so you see how the QQQs are down. This is the NASDAQ 100 for everybody, okay? Follows the biggest 100 stocks in the NASDAQ. It is very heavily weighted towards maybe 5 stocks. Apple, NVIDIA, Qualcomm is one. So it's very heavily, it's like Apple and NVIDIA, like 25% of the entire QQQ index. So when you watch Apple and you watch NVIDIA, it's going to be the same exact chart. Let's go to NVIDIA, check it out. I mean, literally to the penny. You would think this is the same stock, right? There's NVIDIA, there's the QQQ. Oops. QQ. Come on, David, type in the right numbers. There we go. So it's literally the same exact chart, okay? So here, and let's go to, we'll use NVIDIA for an example because this is beautiful. Okay, here's NVIDIA. Okay, check it out. So this NVIDIA now has never gotten above the trend line, okay? So right here was an opportunity again, Sean and everybody else, to get into a short trade. Downtrend, rallies up to my 9 and 15 EMA. That was about 113. And here we are. We're down, almost $1.50 from there. So until this trend is broken, we could stay in that trade for the entire day. And hopefully the idea is that it just keeps going down all day and we'll get out of the position at the end of the day. For a longer term trade, I will give it a few days when something gets going at big levels.
When you enter on daily basis or
correct,
your
I'm entering
signals to enter.
Yeah,
do you trade pre-market or you wait till midday, let's say lunchtime, or what's the story there?
If I'm in a trend trade, I will stay in that trend trade the entire day until it changes against me. Okay. I have a couple of rules about trend trades. All right. I won't enter into a trend trade before 9:45. All right. That's when things can just be flying all over the place. Up, down doesn't mean just the stock opens up or goes down that it's going to be in a trend. I don't do any trend trading during lunch, which is kind of now because there's not a lot of volume. And that's when things can just blast through your trends. And I will not enter any trade for day trading into any trends after 3 o'clock because that also can be the most volatile time of the day. So there's different rules for every different time of trading, of every different kind of trading setup that we have. Peter, I absolutely use pivot points, 100%. Yes. I like to use pivot points when the stock has moved very far up or down, okay? And if we get the RSI stretched out or really low in conjunction with that, I'm going to get a lot of trades based on that. But yeah, pivot points are very, 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 very important. But when I get into a daily trend, okay, like we did in the spiders here, that's not something that I'm going to get out of the next day. If I think I found something on a daily chart after a big giant move, I'll give that a few days to play itself out. And also on every trade we do, I don't care if it's a day trade or a swing trade or whatever it is, I'm going to have a stop order on every single trade that I do, no matter what. Now, swing trading obviously is a little more risky because you're holding something overnight. And you never know what's going to come out overnight that could get you in trouble. So it's not something I personally do very often unless something's hitting a big level on a chart on a daily or a weekly or a monthly level. As a day trader, which is what I really concentrate on, I do not have any positions at the end of the day. I go home. I want to put my head on my pillow. I don't want to worry about China. I don't want to worry about what's going to happen geopolitically overnight. I want to sleep. So as a day
so you don't have any long trade, long position in your portfolio?
Plenty. I mean, look, I'm a little bit older than most people who are doing this. I have some positions in stocks that I've had for 30 years, 35 years. I mean, when I worked on the floor of the New York Stock Exchange, the first bonus I ever got, this was in 1985, okay? I bought some Apple. That was the first thing I ever did, and I still own Apple for 40 years, whatever it is. I have a bunch of things like that. Now, even that being said, when you're in a long-term trade, it's okay to take profits every once in a while. I have been doing that for years. If I think it's gone up a little too much, I'll take some profits. Then hopefully if it gets, a nice pullback on a longer term, I'll buy it back. But even on longer term, and again, this a lot depends on your age, but even on longer term trades, I'm always, trimming some of them when they make big moves and getting back in them and getting back out of them. It's important for you younger people, and I don't know what our age group is here. I'm going to assume it's younger than me, that a couple of things. There's no such thing as a stock market crash, all right? Only opportunity. Every single so-called stock market crash that we've ever had in history has just been a generational or great buying opportunity. Every single one of them. 1987, 1994, 2008, when all the bank stocks. COVID is a perfect example, right? That was, what was that, 2021? That was a perfect example of the market getting absolutely decimated and making new highs again within a year. So for you younger people out there, there's no such thing as a crash. What I will say, and I know we only have a couple minutes left, is even if you're making long-term investments, don't shoot all your bullets on your first shot. In other words, if you find a stock that you like, whether it's NVIDIA or Apple or whatever it is, buy a little bit of it, give yourself some room. If we have those big drawdowns, to add a little bit more, big drawdowns, add a little bit more. If it's something that you're going to hold for years and years and years, you don't have to shoot all your bullets in one shot. Can you pull up the 5-minute oil? Yeah, let's take a look. Would I have gotten out of this trend when the candles went above the 15 EMA? Depends on how far above they get. And it depends on where I'm in the trend, Sean. If I could have gotten into the trend somewhat up here, that might have taken me out for all my profits, right? But it only went, I'm trying to see exactly, 77.19. No, actually I would have. Yeah, because no. It was 77.42, and we went up. We only went 10 cents above the trend line. That wouldn't have scared me out of the trade. I would probably let it go at least 15 cents above the trend line before I got out of the trade. Now, that depends on the ATR. Excuse me. You got to look at the ATR in oil, and if it's 10 cents, then I might have got stopped out for 10 cents. If it's 15 cents, I would have given it a little more room. So you got to know what the ATR is, the average true range, and that's where I'm going to put my stop order. But think about it here. It would have been much better, Sean, if we could have got in, much higher up and then got out there. But so I'd have to know what the ATR was to tell you whether I would have got stopped out or not. But that's a nice downtrend.
We are coming out of time for today. If there is any more question, you can throw. Otherwise,
there you go, Sean. So if the ATR is 20 cents, you got to give it a little more room. We'll end it on that.
I was asking you, David, the entry points actually. I mean, apart from RSI, because sometimes RSI gives false signals about the stock being overbought and oversold.
Okay.
Do you have any kind of confirmation to entries, or
yes,
what's your strategy?
Yeah, when I see something that's overbought or oversold, I will not get in the trade until I see confirmation, and my confirmation is a green bar. So if something's going down, okay, and we get below that 20 RSI, right? So let's say we did it in oil right here, in the QQQs right here. Today we got to about a 19 RSI. So I will wait for this first little green bar, okay? That's my confirmation that we could be getting a turnaround from that point. And wherever I get into it, I'll just have a real tight stop order. If it goes back down and breaks that low, then maybe it can go lower. Yeah, the 1 minute green bar, Sean, is what I'm looking for. So, if we could have got in this 1 minute green bar at 462, at 463, that brought us up to almost 1.5 points on the trade. So my confirmation, I just don't run in when I see a 20 RSI. Yeah. My confirmation is going to the 1 minute chart and looking for what we call a changing of the guard, which is a green bar. That's what it is. Exactly.
Got it. Yeah.